Ladies and gentlemen, welcome. Today, we are standing at the edge of a financial storm that is impossible to ignore. $5,300 gold, $115 silver. These aren't just numbers. These are signals, flashing red lights, warning us of the inflation tsunami that has just hit our markets. The S&P 7000 is no longer a distant dream. It's the new reality, reshaping the way we think about wealth, savings, and the power of preparation. Gold has once again captured the world's attention, surging to an eye-popping $5,300 per ounce, a figure that demands notice from investors, analysts, and everyday savers alike. This dramatic spike is not simply a number on a chart. It is a reflection of growing unease in the global economy, a tangible signal that the financial landscape is shifting beneath our feet. When gold rises this sharply, it sends a powerful message. Uncertainty is escalating, and traditional strategies may no longer suffice. Investors are moving quickly to protect their wealth, seeking a haven in the one asset that has withstood the test of centuries. What is driving this surge? Inflation is roaring back into headlines with unprecedented intensity. Currency values are fluctuating. Central banks are navigating uncharted territory. And geopolitical tensions are creating ripples that ripple through markets worldwide. In times like these, gold is more than a commodity. It is a symbol of stability. Its ascent to $5,300 is a wake-up call for anyone who has underestimated the pace and scale of economic change. The market is telling a story that numbers alone cannot capture. People are looking for security, and they are willing to pay a premium for it. The psychological impact of this surge cannot be overstated. When gold crosses thresholds previously considered extraordinary, it ignites a sense of urgency across financial circles. Traders who once hesitated now feel compelled to act. And those watching from the sidelines are forced to rethink their strategies. Every tick upward becomes a headline, a conversation starter, and a reason to reassess portfolios. The momentum builds not just because of fundamentals, but because human behavior in markets tends to amplify movements once they reach critical levels. Even casual observers are taking note. Social media platforms, financial news outlets, and private investor groups are abuzz with speculation and analysis. The narrative is clear. Gold is telling us something about the state of the world that no single statistic or report can convey. It is a barometer of fear, confidence, and opportunity all at once. For those who read the signals carefully, the surge to $5,300 is not just a reflection of current conditions, it is a roadmap to understanding where markets are headed next. In this moment, gold is not merely a commodity. It is a headline, a warning, and a chance all rolled into one, commanding attention and demanding decisive action from anyone seeking to navigate these turbulent times. Silver has broken through barriers that many analysts only dreamed of, climbing to an astonishing $115 per ounce, a milestone that is sending ripples across financial markets worldwide. This is not just a fleeting spike. It is a reflection of a larger economic narrative, a signal that investors are rethinking traditional strategies and seeking refuge in tangible assets that retain intrinsic value. The climb of silver mirrors the same forces that have driven gold to record highs, but with a unique intensity that captures the imagination of both industrial and investment markets. In every rise like this, there is a story of confidence shaken, opportunity discovered, and urgency awakened. The driving forces behind this surge are multifaceted. Inflation, once considered a temporary concern, is now a persistent reality affecting economies on every continent. Currency volatility, rising energy costs, and supply chain disruptions have created an environment where traditional paper assets appear increasingly vulnerable. Investors, recognizing silver's dual role as both an industrial metal and a store of wealth, are moving decisively. Unlike gold, silver's industrial demand adds a layer of complexity, making its climb a reflection not only of financial anxiety, but also of practical, real-world scarcity. Every ounce purchased is a vote of confidence in silver's enduring value and its ability to weather economic turbulence. The psychological impact of silver reaching $115 is just as powerful as the economic drivers behind it. When a metal, long associated with stability and versatility, reaches record territory, it triggers a cascade of reactions across markets. Traders and investors feel a sense of urgency, fearing that hesitation could mean missing out on the next wave of gains. Social media, financial news outlets, and investment forums buzz with speculation, debate, and strategy, amplifying the momentum. In this environment, silver becomes more than a commodity. It becomes a beacon, signaling the market's mood and the shifting balance between risk and security. Industrial sectors, too, feel the pressure. Silver's rising price impacts manufacturing, technology, and energy markets, creating a delicate interplay between supply, demand, and strategic purchasing. Investors are watching closely, interpreting each fluctuation as part of a broader narrative about economic resilience, scarcity, and opportunity. The climb to $115 is both a warning and an invitation, a warning of volatility and inflation, and an invitation to those ready to act decisively and strategically. Every movement in silver's price tells a story of markets in motion, of confidence and fear intertwined, and of opportunities waiting for those alert enough to recognize them. The financial world is facing a force few can ignore, an inflation tsunami sweeping through economies at a speed and intensity that has left both markets and consumers on high alert. Prices are rising faster than expected, eroding purchasing power and reshaping the way people think about money, savings, and investments. This is not just a ripple in the economy, it is a wave of change that demands attention, strategy, and decisive action. Every headline about higher costs at the grocery store, rising energy bills, or surging housing prices is a signal that this inflationary tide is not temporary. It is transforming the financial landscape before our eyes. The underlying factors driving the tsunami are complex but unmistakable. Supply chain disruptions, geopolitical tensions, and unprecedented fiscal policies have created a perfect storm, pushing prices upward while creating uncertainty about what comes next. Investors are reacting, shifting capital toward assets that can withstand volatility, while everyday consumers are reconsidering budgets and spending habits. The speed at which this inflation is hitting markets has caught many off guard, creating urgency and forcing individuals and businesses alike to rethink strategies they once considered safe. In times like these, awareness and preparation are not optional, they are essential. The psychological impact of this inflation surge is profound. Fear, uncertainty, and doubt can easily dominate decision-making, but so can opportunity. Those who understand the patterns, read the signals, and act decisively can navigate the rising tide to their advantage. Markets are telling a story that goes beyond numbers. They are highlighting weaknesses in traditional financial approaches while signaling areas where foresight and strategic planning can pay off immensely. Each spike in commodities, each jump in consumer prices, and each adjustment in interest rates is a cue for informed action. The impact of this inflation tsunami reaches far beyond individual wallets. It affects businesses planning expansions, governments managing fiscal policy, and global markets seeking stability. Investors and strategists are watching carefully, interpreting every move as both a warning and a roadmap. The surge is relentless, yet within it lies clarity. Those who recognize the trends, act with insight, and position themselves strategically will be better equipped to not only survive but leverage this moment to secure stronger financial footing. The S&P 7000 is no longer a distant dream on financial charts. It is approaching reality, signaling a dramatic shift in market dynamics that investors cannot afford to ignore. This milestone represents more than just a number. It reflects optimism, volatility, and the complex interplay between economic forces and investor sentiment. The approach of the S&P 7000 has grabbed attention across trading floors, boardrooms, and households alike, sparking debates, strategies, and a heightened sense of urgency among market participants when a major index reaches levels previously considered extraordinary. It is a wake-up call, a reminder that markets are alive, unpredictable, and brimming with opportunity for those prepared to act. Several factors are driving this surge. Corporate earnings, despite inflationary pressures, are showing resilience, while technology, energy, and industrial sectors continue to push the index higher. Investors are weighing these gains against the backdrop of rising inflation, fluctuating interest rates, and global uncertainties. Every trade, every hedge, every speculative move is contributing to the momentum that pushes the S&P closer to 7,000. The climb reflects not only confidence in individual companies, but also faith in the broader market structure and the enduring belief that strategic positioning can translate volatility into growth. The psychological effect of approaching such a significant level cannot be understated. Crossing the S&P 7000 threshold carries symbolic weight, influencing decisions and behavior across the investment spectrum. Traders who have waited on the sidelines feel the pull to act, long-term investors reassess their allocations, and new market participants see the potential for both reward and risk. Momentum feeds momentum, and with each upward tick, the narrative of possibility intensifies. The market is speaking, and those who listen closely recognize patterns, anticipate shifts, and prepare to seize advantage. Beyond the numbers, the approach of the S&P 7000 is a lens into global investor psychology. It is a measure of confidence, risk appetite, and the willingness to embrace opportunity in an uncertain economic landscape. Analysts and strategists are dissecting the drivers, watching for signs of overheating, while simultaneously highlighting avenues for growth in a world where financial stability feels increasingly fragile. Reaching for new heights like the S&P 7000 is both exhilarating and cautionary. It demands vigilance, insight, and decisive action, rewarding those who can balance optimism with prudence and strategy with timing. But in times of economic uncertainty, safe haven assets are no longer just an option, they are a necessity. Investors around the world are turning their attention to gold, silver, and other tangible stores of value. Recognizing that traditional financial instruments may not offer the security they once did, the surge in gold to $5,300 and silver to $115 is not a coincidence. It is a reflection of market psychology, a signal that confidence in conventional systems is wavering and that those who prioritize stability are acting decisively. Safe haven assets are becoming the compass for navigating turbulent waters, guiding investors toward preservation, opportunity, and strategic positioning. The appeal of these assets lies in their reliability. Unlike currencies subject to inflationary pressures or stocks vulnerable to volatility, gold and silver have retained intrinsic value for centuries. They are the financial equivalent of solid ground in a storm, a tangible measure of wealth that is recognized globally. As inflation rises and markets oscillate unpredictably, these assets act as both shield and anchor, absorbing shocks while offering potential for long-term growth. Every spike in price signals that more investors are seeking security, creating momentum that reinforces their role as essential components of any robust financial strategy. The psychological dimension of safe haven investing is equally compelling. In uncertain times, fear and hesitation can dominate decision-making, but these assets provide a sense of control and clarity. They allow investors to act proactively rather than reactively, to position themselves with foresight instead of scrambling in crisis. The increasing demand for gold and silver is both a reflection and a driver of market behavior. As more investors flock to these assets, confidence in their stability strengthens, creating a self-reinforcing cycle of trust, momentum, and opportunity. Industrial applications and strategic reserves further enhance the significance of safe haven assets. Silver, for example, plays a crucial role in technology, energy, and manufacturing, adding layers of real-world demand that amplify its value during periods of financial uncertainty. Gold continues to serve as a global benchmark for wealth preservation, currency hedging, and portfolio diversification. Investors who recognize these dynamics are not merely reacting to market fear, they are leveraging centuries-tested assets to navigate complexity, mitigate risk, and position themselves for potential gains while others hesitate. As markets continue to shift and the economic horizon remains uncertain, safe haven assets are emerging as the lodestar for those seeking stability, strategy, and opportunity. Their rise is not just a reaction, it is a statement about how financial security is being redefined in a world where volatility is the only constant. Every ounce purchased, every strategic allocation made, signals a commitment to navigating uncertainty with foresight, courage, and precision. In the midst of soaring gold prices, record-breaking silver, and the relentless inflation tsunami, a hidden truth emerges. Chaos often creates the greatest opportunities. While many are paralyzed by uncertainty, those who recognize patterns, act decisively, and embrace strategic thinking are positioned to turn volatility into advantage. Financial markets are not just numbers on a screen. They are reflections of human behavior, confidence, and fear. When fear dominates, hesitation spreads. But opportunity favors the alert, the prepared, and the courageous. And this moment in history is a vivid reminder of that reality. The current environment is a convergence of unprecedented factors. Inflation is accelerating, commodity prices are reaching historic highs, and major indices like the S&P approach new milestones. To many, this seems daunting, even overwhelming. But embedded within these pressures are pathways to growth. Every spike in gold and silver, every sudden market swing, every adjustment in policy or interest rates carries with it signals that can be decoded by those willing to pay attention. In chaos, information becomes power, and timely insight can turn uncertainty into actionable advantage. The most successful investors understand that opportunity is rarely obvious. It is hidden within turbulence, emerging only to those who are proactive rather than reactive. Markets reward preparation, strategic diversification, and a willingness to act when others hesitate. Safe haven assets, industrial metals, and strategic equities are all tools that, when leveraged wisely, allow investors to navigate uncertainty with confidence. The lesson is clear. Those who view volatility as an obstacle will struggle, but those who see it as a catalyst for growth can redefine the end trajectory of their wealth. Beyond individual gains, this period highlights the importance of adaptability and resilience. Companies, governments, and financial strategists who can pivot quickly, anticipate market shifts, and position resources efficiently will outperform those clinging to outdated assumptions. Every challenge within the financial system carries a corresponding opportunity for innovation, strategic positioning, and long-term advantage. The chaos is not random. It is a call to action, a test of foresight, and a chance to differentiate those who merely survive from those who thrive. This is a pivotal moment where uncertainty intersects with possibility. By interpreting market signals, acting decisively, and leveraging safe haven assets and strategic investments, individuals and institutions alike can transform a landscape dominated by fear into one defined by opportunity. The world is changing rapidly, and those who can read the currents, anticipate shifts, and position themselves strategically will be the ones who emerge not just intact, but stronger, wealthier, and more resilient than ever before. So, what does this mean for you today? It means learning, adapting, and moving decisively. The markets are sending a message. Don't wait for stability to find you. Create your own. Position yourself wisely, invest with insight, and never underestimate the power of being prepared. Remember, even in a tsunami, those who stay alert, flexible, and proactive don't just survive, they thrive. In closing, let this inflation tsunami be your catalyst. Let it ignite your determination to protect your future and seize opportunity where others see only fear. Gold at $5,300, silver at $115, S&P 7,000, these aren't just market figures. They are your invitation to rise, to act, and to turn uncertainty into your greatest advantage. Stand tall, stay informed, and let the waves lift you higher than ever before.